So good morning, everyone. Thank you for joining us today. Unfortunately, you can't have a discussion about payments without talking about the other side of the equation, which is fraud. So we're going to talk a little bit about that today. And I'm sure you've seen the numbers out there, but financial services fraud across the financial services industry is running at about $500 billion a year right now. And that typically costs to prevent and detect fraud about another $500 billion. So you're really talking about $1 trillion problem there. And it's something that is continually evolving, and you have a lot of different forces that are focusing on different aspects of this. You know, you have increased number of channels, you have increased rails, you have increased innovation in technology, you have an expectation of trust from your customers along the way. You have an expectation that everything is going to continually get faster, like faster payments as an example. And you have a lot of regulatory pressure. So we only have a little bit of time today, and we could certainly talk about this for hours, as we did yesterday, but we're going to dive into a couple topics a little bit and give you a little bit of insight into what we're seeing across the world. Two topics in particular. One of them is focusing on the regulatory environment, and then the second piece is talking about innovation and how different firms are approaching the problem of fraud proactively and in some cases reactively, given the nature of the events. So we're going to start off first talking a little bit about the regulatory space. You know, Hemen, maybe you could talk to us a little bit about what you're seeing around the world, and you know, certainly Larry and I can chime in as well. What are the regulators doing? There's a number of tools that they can bring to bear. Certainly, you know, prosecution and fines, and that's one element of the overall picture, but there's new regulations, their interpretation of new regulations, and they're trying to counterbalance the need for innovation against what they need to do to actually protect the financial ecosystem. What are you seeing, and what are you hearing?
Certainly, Rob. So if I start with financial services and payment ecosystem first, what we are seeing across the payment lifecycle, so pre-transaction, during the transaction, and post-transaction, regulators are using innovative approaches to tackle the issue of fraud and scams. Pre-transactions, for example, confirmation of payee, which is really a payee verification, name verification service. What we're seeing in the UK, in EU, Australia, for example, they are all adopting confirmation of payee. We are seeing a lot of proof of concepts that regulators are driving, which are intelligence sharing. So that's all kind of pre-transactions. During transactions, the focus is within a payment journey. When the transaction is happening, how do you identify high-risk payments? So a lot of regulators are focusing on use of, for example, scam detection algorithms. Post-transactions, I mean, UK, very good example of using innovative liability models. So things like mandatory reimbursement on 50-50 basis. So that's a key driver and a key focus currently in the UK. A few other things from kind of post-transaction perspective is how do you share information once the transaction has happened? How do you share data, for example? Again, in the UK, PSR, the Payment Systems Regulator, they published, first time ever in the world, league tables, for example, of APP scams and where the fraud is sitting, both from sending and receiving bank perspective. So that's within payment ecosystem. But I mean, we all know that scams and fraud starts way before we enter payment ecosystem. So again, taking an example from the UK, what we're seeing is UK government coming up with Online Safety Act, which has provisions where big tech and social media platforms have mandate to remove some of the fraudulent advertising. So lots happening across the globe, but yeah.
Yeah, and scams, I think, is an ongoing problem, and we're seeing that rising in a lot of ways. We've come a long ways from the Nigerian prince scam, which probably everybody in the room has received an email from at one point or another. You know, just a couple of weeks ago, I got one from the power company, supposedly, telling me that if I didn't send a payment within 30 minutes, they'd shut off all the power to my house. Now, we're seeing tax scams, romance scams, all sorts of other types of things, and it becomes a bit of a challenge. And the liability model is one of the things that firms are looking about. It brings some challenges, you know. But what else are you seeing, Larry, from a regulatory space? Are you seeing things that are working versus things that are not working, and what would you like to see that's maybe a little different?
Yeah, well, first, thank you very much. It's a pleasure to be here with you this morning. When you talk about regulators, and I know we're focusing on financial services, I think you have to look at the entire ecosystem of regulatory bodies. Because it's not only financial services that are being hit with fraud, it's energy companies, it's healthcare companies, it is the entire spectrum of activity. And I do think that when you look at regulation, and I spent a lot of my adult life in government looking at public policy, but I don't think there is one single answer. I think there are many answers. And I do think there is a regulatory answer. I think there's a legislative, parliamentary answer. I think there are institutional answers. And I also think there are individual answers. But on the regulatory side, specific to financial services, obviously it's a great concern. But I will also say that financial services is one of the most regulated entities as you look at the entire ecosystem of markets. Again, there is obviously regulatory around energy, but it's more focused on their ability to generate power. Healthcare, protect lives, but the financial system is obviously to protect money and make sure there is resilience in the systems. So when you look at the frauds, which have been perpetuating at horrific speed, and I think a lot of that is due to the internet. If you wanted to perpetuate fraud before the internet, you actually needed physical presence. You could only do what you could see and touch. You couldn't really do it at scale. Now look, you could make a really good living committing fraud before the internet, but holy cow, can you do an amazing living now thanks to the internet? And then the really other value of it is you can commit frauds around the world. You do not need to be physically present. You just need to be connected to the internet, and you can do it in jurisdictions that will not prosecute you, but actually will reward you for committing those frauds, as long as you share some of the money you've made and don't attack the citizens of that state. So there's a lot of incentive to go out and do it. Now the question becomes, what do we all do to combat it? And on the regulatory side, I think regulators, like the rest of us, with no disrespect, are struggling. How do we actually do this, and how do we do this right? And there's some interesting, and we were talking here about the UK. I'm really looking forward to seeing how that all goes. And we were saying the law comes out in October, but in the United Kingdom, they were saying that all financial services that are banks in England, as I understand it, will have to reimburse any time there's a fraud. Now, I will also tell you, and I expect no empathy or any sympathy, but I've recently been a victim of fraud twice in the last 60 days. And you would think, if we talk about the informed consumer, I am the informed consumer. I speak to groups all the time about fraud, yet I was frauded. It hurts my feelings. At the end of the day, I lost $5,500 out of an ATM in a rather affluent suburb, and it happened in got a text saying, hey, did you take a withdrawal for $400 at our ATM? I said, I most certainly did not. Clicked the no, stopped the transaction, closed my account, and then I went back and looked at my account. I had $5,500 in withdrawals. I'm like, how dare they? 2 weeks ago, I'm out in California at a cybersecurity conference in San Francisco. My wife calls at me rather angrily. It happens every now and again. And she goes, I've gotten about 13 or 14 calls. Your credit card has been compromised. Call the bank and make them stop calling me. And I'm like, hang on a second. The institutions I bank with wouldn't call 13 or 14 times my wife. And she goes, well, they gave me the first 4 numbers. And she goes, I won't say it, but she gave me the first 4 numbers. And I said, wait a minute, that's publicly available information. But there was somebody, and she goes, and they keep yelling at me. All right, and again, my fault. But at the end of the day, there was a very aggressive fraudster that was trying to give her a sense of urgency, that our credit card had been compromised, that wanted the credentials to go and validate that it was actually my card. And she said, I needed to go call him and give those credentials. But she goes, I don't think this is right. Because every now and again, we actually talk about what I do at work, right? And so that all connected. So I use as an example is the regulators are struggling, we're struggling, the individual's struggling, we're all kind of working together. I don't think there's any perfect solution, but there are a lot of interesting things that are happening out there. But I think it was going to take a collective to kind of get where we're going. I don't know if I answered your question, but I had fun.
Yeah, I mean, it's pretty much a team sport. Yeah. It's a team sport, and it's a complicated sort of thing. And I understand exactly where you're coming from. I would imagine that, probably at least a quarter of the people in this room will receive a text message during the course of the conference that will come from a fraudster. and they're getting very, very creative with some of this stuff. You gave the example from your wife, but and I talked about that. Now, I tend to be a little bit creative because occasionally I will interact with the fraudsters just because, well, I like to mess with them a little. And you can have a lot of fun with them sometimes, and and I look at it as well. That's less time that they spend compromising somebody else, but they get very, very creative with this stuff. I mean, they can mimic websites, they can spoof phone numbers with AI and generative AI. They can do all sorts of different types of things. You can spoof voices. Actually, I was talking to a fraud group at one of the banks recently, and one of the pieces that they showed during the first part of their fraud conference is a supposed message from a person within their bank, the head of the fraud department, and they showed how they generated that entire discussion live, and it took the person about 5 minutes to take the voice and replicate the voice. So a lot of the tools that we kind of had in our tool bag are not as effective as they used to be, and it's true that years ago you literally had to just do it yourself, but now you have teams of fraudsters who are not, it's more like a fraud value chain. I mean, it's logistics, it's supply chain. You're going to have people who are farming accounts, and people who are selling the malware, and people who are, selling the account numbers, and people who are, providing a list of who you can compromise next, and the scripts, and there's a lot of different types of things that they can use in their toolkit, and it really changes how you start to look at fraud, because, your point is 100% dead on. You can be connected anywhere in the world and connect to anybody else, and with all the different varieties of payment channels, with all the different types of speed of processing, all the different mechanisms, and frankly, fraudsters don't have to succeed every time. If you're in the financial services industry, you aren't going to succeed every time, but you're going to try. The fraudsters, they don't have to worry about it. They can send, you can send a text out to 100,000 people for the same cost as sending it to one. So, why not send it out there? And if they get a 0.1% return rate, for a fraudster, that's great. For a bank, 0.1% fraud would be not very good, and it ends up being a lot of money. So maybe we could move on a little bit to the second topic in terms of what are banks doing about this, or what is the financial services industry doing about this? Taking a look at it a little bit more as a team sport activity, because it's not something that your fraud department can handle by itself. It's got to be your product people, your business people, it's got to be your technologists, your risk people, your compliance people, as we talked about a little bit already, but it's also even going beyond the banks into the telcos, the government, the networks. What are you seeing, and what's working and what's not working, Larry?
Yeah, no, it's funny. Every now and again, I meet people and they say, what do you do for a living? And I'm like, well, I'm cybersecurity and fraud and physical security. And if folks are older, they're like, oh, I have a child. You need to talk to them. They need to get into this business. And I'm like, no, you don't want them in this business. It's a dual-edged sword. And the reason I say that is it's a race that you never win. It's a race you never win. In cybersecurity, we win by not losing, right? We play defense. As long as nothing bad happens, you win. In fraud, it's about money, so it is quantitative. And if you work for a bank, they love numbers, and they love counting numbers, right? So you're going to be measured on how much you've saved, how much you've recovered, and it's right, because at the end of the day, that money is actually human beings who have suffered. They've been a victim of crime, and it's our job to protect them to the best of our ability. Banking is about trust. We want to continue that trust, and when we fail to build that trust, that's a problem, because they'll go someplace else because we have failed them. So what banks are doing is, unfortunately, I will tell you, 4 or 5 years ago, if I was sitting at this forum, I will tell you the number one problem we were having was, and no disrespect to the earlier speaker, was credit cards. It was credit cards. We were seeing frauds in credit cards. That was our bigger problem. Oh my gosh. I will tell you right now, our fraud rates in credit cards are incredibly low. We have solved that problem. But it's whack-a-mole in that we have new problems. And one of the biggest problems we've had, and we've had this conversation just yesterday, is around check fraud. Okay. Check fraud. And the way I describe that is what is old is new again. And unfortunately, particularly in the United States, wonderful people called mail carriers, U.S. postal workers, are being robbed at gunpoint, having their mail satchels stolen from them, having the keys to the mailbox where they store the mail so they have to carry 500 pounds of mail around. And people are stealing the mail to get checks. And when they get checks, they will use a variety of techniques to include chemicals to what we call check washing it, to change who the payee is, what the numbers are. And Rob was talking, we were talking the other day at his offices, where it used to be for like 5,500, and now you're seeing 10,000, 15,000, 20,000. The numbers are astronomical. And I'll share this other story with you. So we have 3 fraud operation centers at BMO that we run. There's a 4th in Asia, but I went to all a couple of months ago. So we have one here in Toronto, we have one in Jacksonville, Florida, and we have another one out in Phoenix, and I went to all 3. And we sat with the analyst, and one of the analysts was doing the check fraud. And she called up, and there were 3 checks, and she goes, oh, well, these are clearly fraud. And I'm like, okay. I said, what if you're not as bright as me? What is it that you can show me? And she just started highlighting some things, such as there were 3 checks all written out to her construction company. All the amounts were exactly the same. And then we started looking some other little things and trying to, like our customer was a 82-year-old elderly person. And now you start going, ooh, was this person taking advantage of? And we're literally going in our mind, why would you pay all these, were they trying to avoid taxes? I mean, we were trying every which way we could to figure out why this wasn't fraud. And then the analyst said, hey, let's go look at some of the checks that we know are real, that are from the customer. And it was like a bomb went off. The signatures didn't match, the dates, not the handwriting, none of it. Then we looked at where the construction company, and this was a person in California, there were no construction companies by that name in all of California. Automation isn't catching any of that. It's human beings, and that's part of the problem we're having with financial institutions. There's a lot of great AI, artificial intelligence, that is helping us detect, and I'm going to share an AI story, and then I'll pass it back because I'm going on too long. But at the end of the day, we have to use human beings who have to use judgment in order to detect some of this because the technology's not there just yet. An AI story. We have a tool, I won't say the name of it, but we have a tool that helps us detect fraud coming into the call center. Again, sitting with the analyst, listening to a call, in this case it's a woman, hi, I'm Mary Jones, I'm a new customer, you've frozen my ATM card, I need you to unfreeze it. Our call center says, hey, by the way, thank you very much, I'm so sorry for your inconvenience. And by the way, on this tool, it gives a value. 0 means no fraud, 100 means it's 100% fraud. Anything of a certain value, I won't give you the number, but it's a high value, we actually investigate. So this number was on the high side. So our agent says, hey, look, all we need you to do is just go to one of our branches, bring your driver's license, validate who you are, we will clear this right up. The person on the phone says, I'm sorry, there's no BMO branches near me. Our agent looks at it and says, oh, I just looked it up, there's a BMO branch 3 miles from you, I will give you the address, or I can tell you how to drive there, I can give you the directions. She goes, oh, no, it's okay, thank you so much. I'm like, okay, well, that was easy. Next recording. Hi, this is Mary Jones. You've frozen my credit cards. I need you to unfreeze. Same name, same address. Now it's her credit card that's frozen. She's calling into our call center as many times as it takes until she actually gets the money. That's how persistent they are. When we talk about deposit frauds, they're actually going into our branches. They're telling our folks these sad stories to convince them to clear the check. We want to be good to our customers. We want to be a bank that people want to come back to, but unfortunately there's scrupulous people out there that take advantage of people's goodwill, and we have to teach our folks to be unnaturally harsher than they might want to be.
Yeah, and we're also seeing, and we didn't really touch on it, I'm not going to dive deeply into it, but insider fraud. There's been a ring of things in the United States where the fraudsters are working with call center reps and in some cases with branch personnel and offering them bonuses of $50,000 or more to support fraud. And if you think about it, a typical call center person is probably not making $50,000 a year, so you're offering them a bonus to support this. So you have the people who are trying to do their best to help the their financial clients. You have, the incentives that the fraudsters are offering, and then you have the complexity of the overall environment. And we've been talking more about just purely third party going in and doing these types of things, but then you have the scams where you're convincing people, so how as a bank do you recognize a transaction as fraudulent when the person intentionally sent the money? You can't question every transaction, and if somebody is making a decision to say, all right, I want to send this money, then what do you do about it? I mean, Hemen, I know you've been doing a lot of work in the analytics space. I mean, what are you seeing that people are using to combat, and we've talked about a lot of different vectors, so you can't hit them all, but at least a couple of them along the way. What are you seeing that people are doing to help to manage this problem?
I mean, we talked about fraudsters becoming creative. I'm seeing regulators, central banks, some of the kind of PSPs are becoming creative as well as the regulations move. A couple of examples, I think one, if you look at Brazil, the PIX system, they, for example, have introduced certain payment limits. They don't allow, in the night, they put limits on the transaction amounts to avoid, for example, reduce the risk of kidnapping. To your point, social engineering or making the genuine person to make a transaction, for example. Second example, past 18 months, inbound mule detection has become front and center of everybody's mind. So people are currently working out how do you in real time do inbound mule detection. Scams, to do a scam, to successfully perpetrate.
And sorry to interrupt, but maybe you could describe what a mule is too, because everybody might not be on the same page.
Yeah, so a mule is, so fraudsters, when they want to make a transaction, they would need a target account, and they would usually recruit a mule, for example, a student or an elderly person, so that they can wash the money, launder the money, and they keep laundering until it goes out of the system. So that's what we call an unwitting mule. You have witting mules where people are intentionally being recruited. They know what they're doing, and they support the fraudster, for example. And banks are using, again, real-time mule detection algorithms. And that's become front and center. Again, banks are focusing on how do you cleanse your books of mules? How do you detect in real-time mules? How can you strengthen your controls at the onboarding stage so that you don't let the mules enter the system in the first place? So these are kind of some of the examples that I'm seeing, some of the banks that I work with.
Yeah, and I think that that's one thing that I'm seeing overall from a broader approach is trying to shift in the customer journey, the life cycle of the customer, trying to shift things a little bit more of what I think of as to the left. So, the earlier that you can detect something and prevent it, whether it's on the onboarding portion, whether it's at transaction initiation, I think that we're seeing more of that type of opportunity, but I mean, it comes at a cost. It comes at a cost in terms of building the technology, the operations, but also to a certain extent, like if you put the limits on the customers, it has an impact on the customers themselves. And we are in an industry now where it's, particularly with open banking spreading, it's relatively easy for you to switch from one place to the next. So there's a lot of competition in this space, and the more friction you give to customers, even if it's in their best interest, and when you're talking about scams in particular, it's in their best interest, every friction point that you put up along the way becomes a significant challenge to the customer in maintaining that relationship. And Larry, you mentioned that a lot of the people, even though I briefly touched on insider threat, the vast majority of bank employees want to do the right thing for their customers. And you're in a situation where the fraudsters are getting creative, they're employing new technologies, and you're counterbalancing that against what the bank wants to do for its customers. Are there things that we can be doing differently? I know we talked a little bit yesterday about some of the innovation in terms of bringing together more of a cross-industry collaboration. What are you thinking might be the next steps on that?
Well, some of the things I'd love to see is a cross-industry, public-private sector view on how do we actually go after this? Because it's going to take all of us. There's no one, as I said, entity that's going to be able to solve this in any way, shape, or form. Most of the transmissions that are occurring from telecommunications, internet service providers. I think they need to be empowered. They need to be empowered through legislation to go after these threats more aggressively. They need to be indemnified, so if they go after these threats in goodwill, they get sued for trying to do the right thing. And in some countries, and getting back to the questions about regulators and how international, in some countries, that actually occurs. I think we should have more of a public debate. Yes, there's a potential loss of privacy, but there's potential good there, and we also don't want to have this information for marketing, but rather to go and protect people. So I think that's one aspect. I think there's another aspect of looking at the security vendors. As I look at fraud, and I have, as I said, physical and cybersecurity, the fraud vendor community is using artificial intelligence in what I would say a leading way in across security. If it wasn't for AI, I will tell you our fraud losses would be far worse than they are now. AI is extraordinary, but it's also a double-edged sword because we're seeing deep fakes. Rob said it was about 5 seconds. I've seen 3 seconds. If you get a call on your cell phone or whatever device you use, and they're like, hello, and you go, hello? I'm sorry, are you there? Yes, I'm there. 3 seconds of that conversation is enough to take your voice, use it against you to authenticate you into an organization like a bank and potentially commit fraud. 3 seconds. There are AI that I've heard, I haven't seen, a photograph of you can turn into a video image and then be used to also look like you, sound like you, and off you go. I've done forums like this before and I said, what is the last thought you want to leave? And what I say is you think we're having fun now, just wait. Because when we do this forum, if you invite us back, and you may not want to, and I get it, in about a year or two, I think the conversation's not going to be checks. It's not going to be about ATMs. It's going to be about AI and how they're using our voices and our images and how we've not been able to keep up with this threat and get ahead of it in a way that we need to.
And I think that's a very fair point. I mean, the conversations we're having now, and I've been in the industry probably too long, but it's something where you're constantly changing things. But as Larry even said earlier, some of the old stuff is becoming new again. We're seeing, I mean, I talk to people around the world and I say, we're having a real problem with check fraud in the United States. And just to give you a perspective, typical large US bank, not even like the top 4, losing over $100 million a year in check fraud. And I talk to people in Europe and some of the people, they're like, well, what are checks? But we've still got them, and you've got them here in Canada, and it's happening. So it's going to keep on.
I'll be honest with you, my older children don't know what checks are, and I have to write them for them. But yes, I still have them. But I think they'll fade out over time. But where I'm not encouraged is the fraudsters are just going to go to another medium. If you close one down, they just shift.
Yeah, it's easy. So we're running towards the end of our session here. Maybe start off with Hemen. Some final thoughts that you'd like the audience to take away?
I'll probably go back to basics, and I'll probably piggyback off kind of your point, Larry. If you think about Gen AI and the kind of future of fraud, deep fakes, voice, image, video, to actually detect some of those, I mean, there aren't very mature solutions, but once they are available, do you have the compute power, for example? Are you thinking your 3 to 5 year strategy in terms of fraud technology? Are you investing now so that you can see some fruits 3 years down the line? Again, very basics like cloud native solutions, which gives you that scale when you need it in near future, when you have faster payments, when you have some of the kind of future fraud modus operandi, for example. Do you have the data to actually do some of those detection? So I would actually look at some of the basics and make sure that you have what you need to measure some of the numbers, some of the fraud and scams rate, so that you can then share with your peers, and again, protect the whole ecosystem.
Okay, and Larry?
So my last comment and thought to you all is to really try and inform yourself as much as you can about this threat and this risk. There are a lot of great organizations out there, Canadian Anti-Fraud Center. I'm biased towards bmo.com/security. And by the way, I'm not selling you anything. I'm here to protect you and do my best we can. And unfortunately, we don't always succeed. But I would encourage you to educate yourself. But then I'd also encourage you to have conversations with kids. Have conversations with kids. They're being heavily targeted, not only with fraud, but also with other cyberbullying and other things we don't need to talk about. And then also talk to the elderly. They're being specifically targeted. I think one of the worst frauds that I've seen are fraudsters that look at obituaries, find a surviving spouse, and use their low moment to try and build a friendship, romance schemes, frauds. Please talk to the elderly, talk to the young. They're the most victimized. They're also the most shamed They should not be shamed. They are a victim of a crime. They have nothing to be embarrassed about. The sooner they can get us involved, get law enforcement involved, hopefully the better we will all be. So those are my thoughts, and I hope they're helpful.
And I'll just wrap up a little bit. And we've talked about a lot of different types of things, and as you can see, we could talk about this for quite a long time. But the piece that I would throw out there again, and I said a little bit earlier, but I want to reinforce it again, is fraud is a team sport. You know, it's not something that the fraud department cannot solve all these problems. The product people have to be involved. Your business people have to be involved. You know, and frankly, your customers have to be involved as well. They have to understand where these things are happening, and you've got to collaborate beyond the walls of your institution, because it's not, whatever hits you today is going to hit somebody else tomorrow, and vice versa. If somebody else gets hit for something, check fraud when it started to rise again, started in a couple institutions and then spread broadly across the industry. And we constantly see this type of thing happening is, fraudsters, just like everybody else, they'll start targeting one place and then they'll move on to the next. And as soon as somebody builds up the defenses, they will find that chink in the armor. So if you're not really approaching this holistically and thinking about it multidimensionally and thinking about the fact that this is continually changing, you're going to continue to have problems. And we have to approach it in a very holistic, collaborative fashion in order to solve the problem. So thank you today. Thank you for listening to us, and we'll be around a little bit later at the idea exchange.
Thank you.